Opening overview: today's markets remained cautious amid a backdrop of uncertainty. U.S. futures for major indices, the S&P 500, Dow Jones, and Nasdaq, are trading slightly lower as investors absorb the latest news on tariffs and trade policy. Recent developments show that while tariffs on Mexican imports have been delayed for a month, broader concerns about a trade war continue to weigh on sentiment. This has pushed oil prices higher, strengthened the dollar, and contributed to volatility across both equities and cryptocurrencies. Key news and market reactions: the administration's decision to impose 25% tariffs on goods from Canada and Mexico, with a 10% tariff on Chinese imports, has unsettled markets worldwide. Although Mexican tariffs have been postponed, the lingering threat of escalating trade barriers is driving worries of higher consumer prices and disruptions in sectors like automotive and energy. 2. Stock moves and sector highlights. Tech giants. Apple is trading near $226.82 following its strong Q1 results, where record services revenue helped offset challenges in the iPhone segment. Microsoft remains steady around $412.65, reflecting consistent performance amid a generally cautious market. Alphabet is holding near $202.92 as investors await its upcoming earnings report. Amazon shows relative strength at $238.17, benefiting from positive investor sentiment ahead of its earnings later this week. Electric vehicles and innovation. Tesla is under pressure at around $380.25, as tariff-induced cost concerns and broader market re-evaluations impact its stock. Meta has demonstrated resilience, with shares rising to about $702.89 thanks to momentum from its AI-driven revenue growth. Semiconductors. Nvidia remains a focal point. After a record loss in market capitalization earlier, it is currently trading at approximately $115.83. Investors are looking ahead to its Q4 earnings report on February 26 to gauge the long-term outlook despite short-term headwinds from competitive pressures. Broad market ETFs such as the SPDR/S&P 500 ETF Trust, SPY, the SPDR Dow Jones Industrial Average ETF Trust, DIA, and the Invesco QQQ Trust, QQQ, are trading with modest fluctuations, reflecting an overall defensive posture as investors await key economic data and earnings releases. Upcoming earnings and economic events. Several major tech companies, including Alphabet, Amazon, and Palantir, are set to report earnings this week. These reports will be closely watched for insights on how tariff pressures and shifts in AI and tech spending are affecting performance. Additionally, some semiconductor companies are reporting later than usual, which may signal caution in the chip sector. The U.S. employment report, including non-farm payrolls, unemployment rates, and average hourly earnings, is scheduled for February 7. This report will offer critical insights into the labor market and help shape expectations for future Federal Reserve policy. Other important data, including global PMI figures and trade reports, are also on the docket for this week. Key economic indicators from the UK and the Eurozone will be closely monitored. Recent trends indicate easing inflation, which could lead to interest rate cuts and lower borrowing costs, factors that may help stabilize markets in the coming months. Investment recommendations. Given the current mix of geopolitical uncertainty and mixed earnings signals, consider these portfolio adjustments. Build a balanced portfolio that includes high-quality tech stocks and defensive sectors such as consumer staples and healthcare. Companies with strong fundamentals like Apple and Microsoft can serve as anchors in a turbulent environment. The semiconductor and electric vehicle sectors are experiencing notable volatility. Investors bullish on long-term growth in these areas might consider accumulating positions at lower levels, while staying prepared for potential short-term fluctuations. With key earnings reports and economic data imminent, keeping a portion of the portfolio in cash or near cash instruments can create buying opportunities during market dips. Investing in broad market ETFs can help reduce idiosyncratic risk while maintaining exposure to a rebound if market sentiment improves. With global bond yields showing signs of easing amid falling inflation expectations, Modest exposure to government bonds may help add stability to your portfolio during periods of equity market volatility. Closing summary: today's market environment is defined by caution as investors weigh the impact of tariff news and await crucial earnings and economic reports. While U.S. tech companies continue to show strength, sectors like semiconductors and electric vehicles are under pressure. A diversified, liquidity-focused strategy with exposure to both equities and fixed income can help navigate these uncertain times while positioning for potential long-term gains. Stay tuned for further updates as the week unfolds and key data points, including the U.S. employment report on February 7, begin to shape market sentiment.